I'll start investing in property when I have money, when I have more time, or even when I'm out of debt.
But here's the uncomfortable truth. The perfect moment for you to invest in property probably won't come.
Your brain has a way of protecting you from discomfort and unfamiliar zones. But what if I told you this? Earning 20,000 of passive income a month is not a distant dream. It is doable. It's happening right now with people that are probably earning less than you.
Just imagine this, 20,000 landing in your account every month consistently. Not from extra hours you've worked, but from smart decisions that you made months ago. The only difference between you and them is that they started and you haven't.
So the $1 million question is, will you wait for the perfect conditions to emerge, or will you start your journey with whatever conditions that are happening right now? After years of investing within the South African property market, we have developed a proven step-by-step blueprint for beginner property investors of where to start, no matter your starting point. And the best part is you don't have to be rich, debt-free, or a financial genius.
So first, I will show you how to acquire your first property for investment, even if you have limited money or limited experience. Then I will walk you through the exact system used to scale your property portfolio. What I can guarantee you is that there's no fluff, no theory, just practical examples that you can use today in order for you to start your property investing journey.
The only thing that's standing between yourself and results is the stories that you keep telling yourself about why you can't start. And trust me, years from now, you'll either wish that you had started the time you saw this video or years ago.
Before we even start talking about property, let's first start by addressing one of the conversations that a lot of property investors are not actually talking about. Now, this is affordability. You might think, I earn 20,000 a month, then obviously I should be able to afford to buy a property. But here's the hard truth. Your salary alone does not guarantee affordability.
Let me illustrate what do we mean. So person A earns 20,000 a month, but their monthly expenses add up to 18,000. So that leaves them with a net of 2,000 on a monthly basis because their expenses add up to 18,000. So if person A is applying for a home loan based on those statistics, that means that they are then left with a 2,000 to then be servicing the bond they will then be applying for. Based on those stats, they only qualify for 197,000.
Now person B earns the same 20,000, however, their expenses are only 9,000 rand. This gives them 11,000 on free cash flow on their salary. And they could now qualify for a bond of 738,750 with a repayment of 7,500 on a monthly basis.
Same salary, but different outcomes. So yes, income does matter, but expenses matters more. If you are serious about investing in property, your first point of interest is not location. It's not strategy. It's mastering your expenses, because the bank is not looking at how much you earn alone, but most importantly, how much you keep from month to month.
Now let's put some meat onto the bones. Once you have a steady salary, the next crucial point is knowing exactly how much you qualify for. And the best way to do that is through getting pre-qualified through a bond originator.
A bond originator is a secret weapon within the property game. They act as the middleman between yourself and the bank, helping you to apply for a home loan, comparing the interest rates from the multiple lenders, and most importantly, negotiating the best deal for you. So they don't just submit paperwork. However, it's strategizing, negotiating, and making sure that they're getting the best interest rate for you.
And the best part is that the service they render is to the bank. So they get paid by commission from the bank and not from you. With a bond originator on your side, you are no longer guessing, but you are playing with a clear number in mind, knowing how much you can actually qualify for. And that number now becomes your compass to actually know how much should you actually be buying properties for. This will also tell you that which area should you be looking at and at what price range should you be looking for.
A lot of people start property hunting without consulting a bond originator. Therefore, they waste tons of hours and a lot of money using petrol to go view because they might not have understood what was their ceiling. Do not be that person. Start with your numbers and then develop a strategy from there. Now that you know how much you qualify for, it's time for the big question. How do I find the right deal?
Here's a mistake that most first-time investors make. They assume that any affordable property is a good property to invest in. But the truth is, not all cheap properties are good for investment. And at the same time, not all expensive properties are also worth it for you to invest in. Remember this, you're not just buying a house, you are buying an investment. So if you are a beginner and you're trying to get your journey started, make sure that you do send us an email so that we can have a free Zoom meeting. And how can we get you to where you want to be?
So your first priority is to buy a property that will make financial sense by leaving you with a cash flow from month to month. So therefore, we should have a surplus after us paying our bond, rates and taxes, levies if applicable, and other operational expenses for running that property as a business. So here's a simple filter that a beginner property investor can use when searching for a property to invest in. Will the rent cover all the costs and still leave you with a cash flow on a month-to-month basis? Number 2, is the property in high rental demand? Number 3, am I able to retain my tenants with the current property that I have? Okay. Number 4, are there any red flags in the area like declining property values? Tools like Property 24, Private Property, Lightstone Report, and even Facebook marketing are strategic tools that can help you in your journey as a property investor. But the real secret is we have to run our numbers before we fall in love with the property.
A beautiful property that loses you money on a monthly basis is just a liability in disguise. A real deal should pay you and not drain you. So now you find a property that is promising. But here's the part where a lot of people leave money on the table: negotiating. I want you to remember something. The asking price is not the final price. In fact, if you are paying the full price without negotiating, that might be very risky. And in property, you do not make your money when you sell, you actually make your money when you buy.
So the real question is, how do you negotiate or position yourself like a smart investor who will be making their money when they buy? Step 1, do your market research and understand the market thoroughly. Use platforms like PropStats to understand where the market is by comparing similar properties that were sold within that area in that year, and not just what they listed for on Property 24. Step number 2, look for leverage. Is the seller under stress to sell quick? Has the property been on the market for months? Are there visible repairs or maintenance issues that you can see with your naked eye? Every issue is an opportunity for you to negotiate the asking price. Step number 3, which is very important, do not get emotionally attached to the property. The numbers need to make sense. If they don't work, you walk. Simple as that.
Remember this, sellers are already expecting you to negotiate. So they have already created a buffer between what they actually want and what they have actually priced the property for. So when you negotiate, you're not being difficult, you're just being strategic. Because for every 10,000 you save upfront could mean the difference between a break-even point and you cash flowing. So here's the truth. Building a property portfolio that's worth 20,000 in cash flow on a monthly basis isn't about luck, timing, or already being wealthy. It's about the numbers, choosing the right deals, negotiating smartly, and taking consistent action.
So now you have the roadmap as a beginner property investor. Understanding affordability, getting pre-qualified, consulting level, then hunting for a cash flow positive property, then negotiating like an investor, not a buyer who's not informed. And most importantly, start before you feel that the environment is ready. Because 1 year from now, you will either have a cash flowing property or a list of reasons why you were not ready to invest in that property. The choice is yours.
If you found this valuable, make sure that you drop us a comment and tell us what has been holding you back, or what are you going to be doing today to take action. Don't forget to like, subscribe, and share with someone that you think needs to hear this video.
Let's build wealth, one cash flow property at a time.